market functioning, the focus of the Fed right now, but when it comes to maintaining credit availability, the focus should be elsewhere. Your thoughts on that?
So first, I think Brian is spot on, and I'm so happy you had him because he has so much experience. And he's spot on in saying that the Fed is responding. It has to do a little bit more, be a little bit more aggressive, and it has to also assess the functioning of the tools, including the commercial paper, where the price is an issue. That's really good. He's also completely right in saying when it comes to credit, while the Fed can be the agent, there has to be a backstop from the Treasury, that we have to be careful not to contaminate the Fed balance sheet with too much credit risk. We need central banks going forward to be the risk-free asset. So one has to be careful as what we impose on it, but you need the Fed as your agent, and you need the backstop of Treasury. So I completely agree with the approach that Brian has set out.
Mohamed, I want to talk about fiscal policy as well, if I can. A headline just crossed the Bloomberg. It came from Handelsblatt, and it's about German fiscal stimulus, planning an extra budget of at least 100 billion euros. My friend and colleague, a gentleman called Lorcan Roach Kelly, put out a diagram recently, and it was two circles, and it goes back to 2012. On the one circle were all the things that Eurozone and Eurozone policymakers need to do right now, and separated away from that was another circle that basically were all the policies that are acceptable to Germany. No crossover whatsoever between those two circles. Are those two circles crossing over, or are they just closer together, Mohamed? Because I see the Germans getting closer to doing something. I've just not seen them pull the trigger yet.
They're getting much closer, much closer, and they will overlap. You've reminded us over and over again in the last few weeks that crises is what moves the Eurozone. And it's what moves Germany in particular. And this crisis is hitting Europe very hard. Europe is at the epicenter now of the coronavirus. People are witnessing the tragedy that's happening in Italy. And they're reacting. So, yes, they are getting not just much closer. You're going to start to have much more of an overlap. It's unfortunate that it took a crisis for this to happen, but that's the history of the Eurozone.
In the last couple of minutes we had, Mohamed, let's reflect on some of that and how things might change as we work our way through a pretty worrying time for most people worldwide. Let's reflect on Europe. For the Eurozone, it has taken a crisis repeatedly for them to deploy the right tools and the right policies. And we saw going back to the Eurozone debt crisis that it took the debt crisis to finally get the ECB to start acting like an adult central bank. Their policies and outcomes that are still with us today. As we work our way through this crisis, is there a policy story you expect to shift and stay that way even after this health crisis fades?
Many, John, many. And my hope is one of these will be the understanding that we have to care about the aftermath. It's not enough about winning the war. We also have to win the peace, because a big mistake we made coming out of the 2008 crisis is that while we succeeded, policymakers succeeded in averting a great global depression, they didn't realize that the landscape going forward would be different. So keep an eye on the landscape. And one thing that I always like to remember who's listening to you is not just professionals, it's lots of retail investors. And I always caution that we shouldn't excite retail investors one way or the other. Regret minimization is the most important principle right now to guide what you do in markets, because markets are highly uncertain. Mistakes will be made. You just want to be able to afford your mistake, because no one can predict for sure what's going to happen to the economy or what's going to happen to markets. This is unprecedented.